Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. This is another episode of the Mortgage Guy Podcast, and this week is a follow-up to last week's. Yeah, a little boring, right? So it might be short and sweet here, but want to kind of clarify some things. We got a lot of activity on our last video talking about thin credit score, no credit score borrowers, and adding membership services to thicken up credit profiles. There were some questions on there that I had to answer, mainly you TikTok followers out there that like to throw shade at something you don't really know much about, but that's all right. Let's address it anyway. So one question, which was a legitimate question, right? So will the alternative credit be added permanently to the credit report? So if you remember last week, guys, what we talked about is taking membership services, Netflix, Hulu's, gym memberships, you name it, like that, and adding it to the credit profile to add or thicken that credit profile. So let's kind of go back a little bit more here. So when you underwrite a file, and we have to validate credit histories and things like that to ensure that you have enough credit history to apply for a mortgage loan, we were talking about thin credit. So maybe you only had a credit card for 12 months. All right, so 12 months is the key window or time frame that you need to have a credit line open and active in order for us to consider it a valid line. But what we were talking about is adding alternative lines to thicken up the credit profile, right? Things like verifying rent, utility bills. We talked about the membership services, car insurance, phone bill. And the reason this is so important and why it was such a big adding the membership services is because a lot of times I have clients in their mid-30s and even 40 years old that just don't use credit, right? Should we be punishing those buyers because they were responsible enough to use cash for every transaction? Absolutely not. So this alternative credit that we're adding to the credit profile helps prove that they have a history of paying contractual debt obligations on a timely basis. That's what it's for, right? To show they've got something. Because when we underwrite these files, because subprime was brought up, when we underwrite these files, it's no different than anything else, right? We got to document your job history. We got to document, make sure your debt ratios are in line, income, assets, you name it. We got to hang our hat on something to make sure we can approve this file. It's just this alternative credit line piece, these little ads that USDA did, is just going to help us thicken up those credit profiles and bring more borrowers into the fold. They still got to have everything else. So will it be permanently added? So if I go out and I verify Netflix history or verify your gym membership for 12 months, it will not be on your physical credit report if you ever look at it again. It's simply a supplement that we will get from the credit bureaus showing the payment histories. Okay, so it will not be added. So it's not going to create a credit score for you. Here I am talking with my hands again. Let's talk about the subprime piece a little bit. So someone says, great, sounds like subprime because that worked out so well for us in the past. No, it's not subprime. Some people's definition of subprime is low credit score borrowers or no credit. Incorrect. What caused the problems back then isn't necessarily just the credit piece, right? But we did not participate in the subprime lending market back in the early 2000s. That's how our small company survived the meltdown of 2008. But what it really was is ninja loans, right? No income, no jobs, no assets, no verifications. That's what created the mess, or that's truly what a subprime loan is, right? You come to apply with me, I write your information down. We're going to tell you it doesn't matter if you have a job. We're not going to verify. We're not going to verify how much money you have in the bank. We're not going to verify anything. We're just going to close you. That's a subprime loan, all right? Now, that's a little bit of a loose definition, but a no credit score borrower definitely does not fit in that fold to answer that individual's question, right? Like I mentioned earlier, we're not going to punish people that were responsible for using cash all their life, and they didn't create a credit profile for themselves. Doesn't mean they're a bad credit risk, okay? So I wanted to kind of answer that question that was out there, because like I said, we're still going to fully underwrite these files with their income history, or income and job histories and their rental histories and all of that to make sure that they can't afford this property. So I just wanted to answer that. Are you or is there an age restriction on conventional financing? This actually wasn't a question on one of the TikTok videos or any one of my posts. I had a call from a real estate agent just yesterday, I think it was, and a lender, two different lenders, I believe, told one of their borrower that they had to be 25 years old, like they're renting a car, to get a conventional loan. I have no idea where that came from. The realtor got a pretty good kick out of it based off my response, and I thought it was comical. So there is no age restriction. You have to be an adult, 18 years of age, to enter into a legal agreement, right? And I've closed a couple of people that were 18 years old going on 19. Crazy, very rare, because you still got to have employment history and income and stuff like that. But you know what? We've had these young kids that have been working since they were 16, 15 years old, and there's a documentable work history. They've created a line of credit for 12 months in their name. They've done all sorts of stuff to create a credit profile for themselves, and they were able to close on a house. But to answer your question, you have to be at least 18 years of age in order to qualify for any loan type. But you don't have to be 25 to apply for a conventional loan. So hopefully that answers your question out there. Other than that, guys, I mean, those are the main things. I just wanted to kind of address that because, some of the podcasts from last week can be taken out of context. We do a lot of shorts. So I want to make sure people understand that those are not subprime loans. They're simply just thickening up people's credit profiles and helping those cash buyers or those cash users get into the market. We're not going to punish those people because they decided to use cash instead of borrowing their money to support their lifestyle. So just a thought there. I know this is a quick video, but I wanted to update you all on that. And we're going to have some interesting stuff next week. We're going to be discussing FHA financing again, and Teresa Rose, our owner, is going to be on here, so prepare yourselves for that. But that's all I got for you guys this week, other than market's still a little bruised up out there, so hang tight, guys. It's going to improve. It will happen. So remember, subscribe on YouTube, okay? I need you. Keep checking us out. And that's all I got for you guys this week. Remember, check us out on YouTube and subscribe, Apple Podcasts, and Spotify, and we will see you all next week.